Welcome back to Investing Talk Podcast. We've got a really fascinating deep dive lined up for you today. We're tackling a question that I know has been on many of your minds. Is Grab, the Southeast Asian super app, a good time to buy right now? We'll be digging through the latest data, earnings reports, strategic moves, all of it, to give you a really clear and insightful picture. Before we unpack this, though, if you find our discussions helpful and you enjoy these deep dives into company fundamentals, please do consider subscribing, liking, maybe leave us a comment. Your support honestly helps us continue to bring you more in-depth analyses like this one. And if you're feeling generous, you could even consider buying us a coffee. The link's usually in the description.
It's definitely a key question right now. And, the answer is rarely just a simple yes or no, is it? Especially for a company as dynamic as Grab. To really make an informed decision, you need to understand the whole picture, their operations, their financials, competition, future growth, everything. So today we're going to pull back the curtain on all of that so you can really see what's driving Grab at this moment.
Okay, let's start by just grounding ourselves. We're talking about Grab, obviously the leading super app in Southeast Asia. For anyone who might not be super familiar, what exactly is a super app in this context and, what makes Grab such a dominant player?
Right. Grab is basically, think of it like a digital one-stop shop. It's this whole ecosystem designed to handle multiple daily needs all through one single platform. And it's way beyond just ride-hailing now. We're talking food, grocery deliveries, package delivery, and importantly, a growing suite of financial services, payments, lending, insurance, the whole nine yards, this multi-service approach. It's really central to their whole strategy. And it works. They've got a dominant market leadership spot across 8 countries in Southeast Asia, serving, get this, over 44 million monthly transacting users.
44 million users. That's huge, especially across different countries.
Yeah.
How does having all those services under one roof, plus that dominant position, how does that actually give them an edge? What about those network effects you often talk about?
Ah, yes, the network effects. That's where the magic of the super app really happens. When you have that many users actively using multiple services, it creates these incredibly powerful feedback loops. So for instance, someone ordering food on Grab all the time, they might just default to using Grab for a ride because, well, their payment info is already there, they trust the app. It's easy.
Right, convenience.
Exactly. And that cross-selling makes users stickier, more loyal to the Grab ecosystem. Then, because all the customers are there, more drivers and merchants want to be on the platform too. It just feeds itself. Makes it really tough for newcomers to break in or even for existing rivals to truly match Grab's scale and stickiness across the board. It's like this digital flywheel, a real foundational strength.
It makes a lot of sense. Okay, let's pivot then to the financials, because this is where things get really interesting with Rab lately. After years of that, grow at all costs mindset we saw across tech, Grab seems to have pulled off a pretty remarkable financial turnaround. What's the latest performance telling us about their path to actual sustainable profitability?
Yeah, the pivot is definitely the big story here. It's quite stark. Grab's shown really robust revenue growth, up 18.6% year over year in 2024, hitting $2.80 billion for the full year. And that momentum didn't stop. It carried right into Q1 2025. Revenue hit $773 million. That's up another 18% year over year.
Okay, strong growth still.
But the real story, the thing investors need to see, is the bottom line. Grab actually achieved net income profit of $10 million in Q1 2025.
Wow. From a
For a $115 million loss in Q1 2024. It's a huge swing, a massive improvement. And for the full year 2024, net losses also narrowed significantly, down to $105 million from $434 million in 2023. This isn't just numbers on a page. It fundamentally changes how you view Grab, right?
Yeah.
From maybe a speculative tech play to potentially a self-sustaining business.
That's a major milestone, no doubt, but profit's one thing. For a company like this that was burning cash for so long, cash flow is maybe even more critical, isn't it? What's the picture there? Are they actually generating cash now?
You're absolutely right to zero in on cash flow. And yes, this is probably the most compelling part of the financial story right now. Grab's operating cash flow. It turned positive, $852 million positive in 2024. Compare that to negative $819 million just 2 years prior in 2022. It's a massive leap.
Okay.
And free cash flow, the cash left after running the business and investing in it, that also turned positive. $775 million in 2024, up from negative $893 million in 2022. So yes, they are generating real cash in their operations now, and there's more. Gross margin improved quite a bit to 42.0% in 2024 from 36.5% in 2023.
Better efficiency there.
Definitely. And crucially, their EBITDA margin, that's earnings before interest, taxes, depreciation, and amortization, it finally reached positive territory, 0.25% in 2024. And get this, that marks their 13th consecutive quarter of improvement in EBITDA margin. 13 quarters in a row. That's impressive consistency.
13 quarters. Okay, that shows real discipline.
It really does. Achieving positive EBITDA is a huge signal. It means their core business, before things like debt costs or asset depreciation, is actually profitable now. It shows real operational efficiency, real scale kicking in, this whole financial performance package. It's clear evidence they've successfully shifted from that growth at all costs playbook to a much more disciplined focus on sustainable profit, all while keeping that market leadership.
That's a compelling turnaround story, backed by some solid numbers, but brings us to the big question for anyone thinking of investing now. Is Grab expensive? What are the valuation metrics telling us, especially compared to, say, Uber or Didi?
Right, valuation. Based on current numbers, it does look like it trades at a premium. Take the price-to-sales ratio, the PS, it's sitting at 5.0.
Which is high compared to
The industry average of about 2.02. So yeah, nearly triple the average. And the price-to-earnings, the PE ratio, currently it looks astronomical, like 492.8. Yeah, but that's mainly because current earnings are still minimal, just barely positive. However, look at the forward PE based on expected future earnings. That drops dramatically to around 88.49.
Okay, 88.49 forward PE. Sounds pretty rich, doesn't it? Especially when you look at Uber's PE around 15.5. Is the market just maybe getting ahead of itself on Grab's future profits, or is there something unique about Grab's position that justifies paying up?
That's a really sharp point. Yes, 492 looks crazy, but that drop to 88 tells you the market is definitely betting on a big surge in profitability as they continue to scale and mature. It's classic high-growth company territory, right? You're often buying into the future earnings potential, not the current snapshot. Now, comparing to peers, Uber's around 15.5 PE, Didi's about 31.1, and Lyft. Well, Lyft is still struggling with a negative PE. So Grab's current valuation absolutely reflects high expectations. But the forward numbers suggest a path towards strong profitability is anticipated. The unique edge. It's that deep entrenchment in Southeast Asia. It's a region with incredibly fast digital adoption, and Grab's super app model really fits the local market dynamics, maybe even better than in some Western markets. That gives them a growth runway that arguably peers might not have quite to the same degree.
Okay, so the fundamentals show improvement, but a forward-looking valuation. What about the technical side? What are the charts telling us about the stock price movement and investor sentiment right now?
Technically, the picture looks pretty constructive, actually. Grab recently closed around $4.92. That's up a healthy 39.4% year-to-date, still about 14% below its 52-week high of $5.72, so some room perhaps. Importantly, it's trading above its key moving averages, the 20-day, the 50-day, and the 200-day. That's generally seen as bullish, suggesting upward momentum.
And you mentioned a golden cross.
Exactly. There's a golden cross in place, where the shorter-term 50-day moving average crossed above the longer-term 200-day. Technical analysts often read that as a strong buy signal, potentially indicating a longer-term uptrend is forming. Looking at momentum indicators, the Relative Strength Index, the RSI, is neutral, around 43.65. So it doesn't look particularly overbought or oversold right now, just neutral. And the MACD, another momentum indicator, is showing a bullish crossover. That's often interpreted as momentum shifting towards the upside.
So overall technicals are leaning bullish.
Overall, yes. The technicals seem to suggest a bullish trend is intact. Breaking above those key averages suggests potential to keep going higher. Now, about volatility, it is elevated, about 42.3% annualized. It's pretty typical for growth stocks, expect swings. But interestingly, its beta is 0.84. Meaning it's actually slightly less volatile than the overall market index. A beta below 1 means lower market correlation, which might surprise some people expecting a wild ride.
That is interesting. So fundamentals improving, technicals looking constructive. But investing is always about the future, right? What significant developments or catalysts should we be keeping an eye on for Grab moving forward?
Absolutely. Future catalysts are key. And a really big one recently is Grab's strategic collaboration with OpenAI.
Ah, the AI angle.
Yes. And this is the first partnership of its kind for OpenAI in Southeast Asia. The goal is to fundamentally improve the experience for everyone. Users, partners, even Grab's own employees using advanced AI. This isn't just a press release. It seems like a deep commitment to integrating AI.
Okay, that sounds significant. How exactly are they planning to use OpenAI's tech? What kind of practical applications are we talking about?
They've outlined several key areas. First, using AI for accessibility, things like text and voice features to help visually impaired or elderly users navigate the app better. That's huge for inclusivity and potentially expands their user base.
Good point.
Second, exploring AI for smarter customer support chatbots. Think faster, more accurate answers to user queries, improving satisfaction and efficiency. Third, using OpenAI's vision capabilities to improve their map making. Faster map updates are crucial for logistics and ride-hailing, especially in constantly changing Southeast Asian cities.
Makes sense.
And fourth, they're even planning to pilot ChatGPT Enterprise internally for some employees, aiming to boost productivity and innovation within GRAS itself. So it's really across the board, user-facing, operational, and internal.
That's quite comprehensive. Beyond the AI tie-up, what other recent news is relevant, and what are the key things on the horizon investors should be watching?
Well, another significant piece of news was their successful upsized convertible notes offering $1.5 billion. The strong demand shows good investor confidence, and the cash gives them flexibility for potential acquisitions or share buybacks.
More financial firepower.
Right. And they also solidly beat revenue estimates in Q1 2025, which just reinforces that positive financial narrative we talked about. Looking ahead, catalysts. Short term, all eyes are on the Q2 2025 earnings report. That's coming up August 14th. It'll be a key test. Can they maintain guidance, keep this trajectory going? Also, watch any developments around the GoTo merger speculation in Indonesia. If that market consolidates, it could unlock significant value for Grab. And just continued expansion in Indonesia generally is a massive market with strong GMV growth already.
Okay, those are near term. What about longer term drivers?
Longer term, a big target is achieving profitability in their digital banking and financial services segment by 2026. Hitting that would be another major inflection point. Then there's just the sheer size of the opportunity. The Southeast Asia digital economy is projected to grow massively, maybe $600 billion to even $1 trillion by 2030. That's just a huge tailwind for Grab. And further out, though still early days, any progress on agreements with autonomous vehicle companies for potential fleet operations could be transformative down the line.
Okay, so we've covered a lot. Market position, the financial turnaround, valuation nuances, technicals, AI, future catalysts. Let's bring it all together. What's the bottom line for someone considering investing in Grab right now? What's the overall recommendation based on all this?
All right, synthesizing all that, the overall rating comes out to about a 7.5 out of 10. So presenting what looks like a compelling long-term investment opportunity. But, and this is crucial, you really need to differentiate based on your investment horizon. The risk-reward changes.
How so?
For long-term investors, people looking out, say, 3 years or more, the rating is stronger, maybe an 8 out of 10. The recommended strategy there would be to consider accumulating shares on any pullbacks or weakness, perhaps specifically in the $4.20 to $4.60 price range. The primary price target over, say, 2 to 3 years could reasonably be in the $7.50 to $8 zone.
And the rationale for that longer-term bullishness?
It really comes down to that dominant market position, the clear improvements in profitability and cash generation we discussed, and just the massive potential of that Southeast Asian digital market. They're showing they can grow profitably now.
Okay, that's the long-term view. What about short-term traders? Is it a different story?
For short-term traders, yes, it's a bit different. The rating is more cautious, maybe a 6 out of 10. This is mainly due to those elevated valuation metrics on current earnings and the inherent volatility. The recommendation for trading would be a tighter entry range, maybe $4.30 to $4.50, and critically, using a stop loss, perhaps around $4.05 to manage that downside risk. A potential take-profit target might be around $5.20. It's just a different game, managing the shorter-term swings.
Makes sense. Now, no investment comes without risks. Grab operates in a complex environment. What are the key risks potential investors absolutely need to be aware of here?
Absolutely critical point. Risks are definitely present. On the company-specific side, that high current valuation remains a risk. It bakes in a lot of future success. Regulatory hurdles are always a factor across the multiple countries they operate in. Governments are still figuring out how to regulate the digital economy. And competition, while Grab is dominant, remains intense. There are other well-funded players in the region who won't give up easily.
And broader market risks.
Yes, sector and macro risks too. A significant economic slowdown in Southeast Asia would definitely impact consumer spending on Grab's services. Currency fluctuations are also a risk, operating across so many different currencies. And as a growth stock, it's sensitive to rising interest rates. Higher rates make future profits less valuable today. And as we mentioned, while the beta is below 1, the stock itself still has high annualized volatility. Expect price swings.
So for those who weigh the risks and rewards and decide to invest, long or short term, what are the absolute key things they should be monitoring going forward to track if the investment thesis is playing out?
Okay, key monitoring points. First, watch the quarterly progression of EBITDA. Is it moving consistently towards sustained, healthy profitability? That's core operational health. Second, any concrete developments regarding that potential go-to merger in Indonesia? That could be a game changer. Third, keep an eye on market share trends, especially in Indonesia. Are they holding or gaining ground in that key market? And fourth, track the progress of their financial services segment towards that 2026 profitability target. Is there a clear path emerging? Ultimately, the whole investment thesis really hinges on Grab successfully continuing this transformation from just chasing growth to delivering sustainable profits while staying the leader in one of the world's most exciting digital growth stories.
That's an incredibly thorough look at Grab, thank you. It really feels like a company at a fascinating crossroads, doesn't it? Shifting gears from pure expansion to proving out the profitable business model in this huge dynamic market, it does echo some of the journeys we saw from earlier tech giants.
It really does.
Yeah.
And, connecting it back to that OpenAI partnership and the focus on things like accessibility and mapping, it's more than just efficiency gains, isn't it?
Mm-hmm.
It hints at a future where these super apps aren't just about convenience, but maybe about deeper societal integration, making services truly accessible for everyone. By weaving tech into daily life more inclusively and effectively, Grab might be shaping how millions interact with their world in Southeast Asia. That itself could be a powerful long-term value driver beyond just the numbers.
That's a really powerful thought to end on, something for all of you to consider as you reflect on this deep dive. Thank you so much for joining us for this insightful discussion today. We genuinely hope it helps you in your own analysis and decision-making process. We'll be back soon with another deep dive.